Welcome to week 18 of 52 of Stock Roulette, where I invest around $50 a week randomly into one stock. I just load this week's top 10 pick into pickrandom.com and just give it a spin. And then we talk about why that stock was in my top 10 list for that week. We had a few nice squeezes from a few of our picks like Skills and NVIS last week. Many companies have been reporting some great earnings, but there's still a lot of FUD in the market lately. But we're investing for the long haul here, and many of our picks are going to be winners in due time. That's a big reason why I'm not using any margin. And I am still bullish on growth, biotech, and energy. And let's hope a little bit of momentum comes back our way. All right, let's roll. This week's pick is a popular meme stock this year, Clover Health, ticker CLOV. Looking at a keyword research tool for talked about stocks on Twitter for over the last 6 months, Clover has been one of the most talked about in all of the stock market. So let's back up and talk a little bit about why. Clover Health recently merged on January 6th with Social Capital SPAC, backed by the famous Chamath Palihapitiya. He's a billionaire investor who's got his fingers in a lot of different SPAC ventures. Clove stock is one of them, and it's been controversial to say the least. The stock rallied over 60% this year and then crashed back down 64% in 2 months' time. Medical coverage is a huge expense in most households, but it is a necessary evil because there's just no way to cover the cost out of your own pocket, and nobody wants to plan for sickness. But when it hits, it's a financial disaster without insurance. It won't be hard for Clover Health to find subscribers. Clover Health operates as a next-generation Medicare Advantage insurer, which leverages Clover's flagship software platform, the Clover Assistant, to provide America's seniors with highly affordable healthcare plans by empowering physicians with data-driven, personalized insight at the point of care through the Clover Assistant platform. Clover strives to improve clinical decision-making and outcomes. Since 2012, Clover has been one of the fastest-growing Medicare providers in the United States, with over a 38% annual growth rate, compared to an 8% industry average. Healthcare spending has grown exponentially over the years, and in 2019, there was over $3.65 trillion spent. America has the highest rate of people with 2+ chronic illnesses as well as the highest administration cost of 8.3%, which is the percent of total healthcare expenditures. So Clover Assistant is a combination of machine learning as well as an expert data system. Physicians use Clover Assistant to help them deliver better care to patients and address two main issues: money and time. Clover takes the pain out of the payer reimbursement by paying PCPs a prompt, predictable, and enhanced rate. In just 5 minutes or less is all the average time that people spend interacting with Clover Assistant. There are also supplemental clinical programs powered by the Assistant, including in-home care, supportive care for members with limited life expectancy, remission prevention program that helps recently discharged individuals from the hospital, and behavioral health program for members with behavioral health and social service issues. The Clover Assistant is a smarter way to manage all of your member needs by holding PCP charts, specialist charts, EHR data, pharmacy data, lab data, socioeconomic data, and evidence-based protocols, all in a software that creates smarter, actionable data for those members. And you can invite members with a text or an email link for telehealth, which features embedded video functionality for easy chat. So let's take a look at some of their financials. The revenue in 2020 was $664 million, and it's expected to be $872 million this year, and also expected to grow an average of 37% annually. And as most SPACs go, the PIPE value was around $10 a share when it initially came out, and it ran up to almost $18 a share back in late December. Then of course it had a few short reports from Heidelberg and a few other things, and the stock came crashing back down under $10 a share, and actually closed just under $10 a share as of this past Friday, April 30th. This stock has been beat up pretty good in the last few months and heavily shorted. So some analysts rate this a strong buy and others a hold, with an average price target of almost $13. So I guess there's very little downside to invest in this stock price, by maybe only a couple of bucks on the downside and a much more higher upside potential. But this one could be a long haul. There may be more short squeezes to come if Wall Street Bets comes through once again like they have before. Okay, so let's go and make a quick purchase. Okay, let's go in here, CLOV. Okay, we're gonna do market buy. It's currently trading for $9.58. We're gonna do 5 shares at $47.85. There we go, we're all set. Okay guys, please remember, I'm not a financial advisor. Please make sure you do your own due diligence before you purchase any stocks. And if you haven't started trading yet, there's Robinhood and there's Webull. Both are free. I recommend Webull over Robinhood because you can trade as early as 4 a.m. You can also trade after market closes. If you use my link below to create an account, throw $100 in there, we'll both get 2 free stocks. Lastly, as always, I'm wearing one of my custom designer dress shirts. That's my primary business. So if you guys want to check out custom designer American-made dress shirts, I'll link my business below. And I hope you guys enjoyed this week's video. Please hit the like button for the YouTube algorithm. Consider subscribing to the channel. I do have a lot more videos to come.